Hi, I'm Nicola McKenzie, founder and insurance specialist at Dunham McCarthy. In today's video, I'm going to be talking to you about individual versus joint life insurance. Which option is best for you? Stay tuned to find out. Now guys, before we get into the detail of today's video, I want to let you know that this is only one part of a whole series of videos dedicated to life insurance. So to find out everything you need to know about life insurance, make sure that you check out the rest of the videos in the playlist. And of course, if you enjoyed today's video and it's useful for you, make sure that you hit that subscribe button and the notification bell so that you don't miss any future videos. Now in this video, what I'm going to firstly do is outline scenarios where an individual policy might make sense. Then we'll look at when a joint policy might make sense. And then I'm going to look at other points that you need to consider when trying to work out whether individual or joint policies work best for you. Now, if you want to provide a lump sum to your loved ones after you pass away to cover funeral expenses, and there's two of you, you're both going to need individual funerals. So again, a joint policy in that scenario may not be the best option because it's not necessarily going to cover both of you. A joint life first death policy is going to pay out if you're both covered jointly when the first person passes away, and then usually the cover would stop. So again, if you're taking cover out for funeral costs, joint policy may not be the best option. Now, another common scenario why an individual policy might make sense is, let's say that you're in a relationship, but you have children from a prior relationship. And let's say that you want to leave money specifically to that child or children from that previous relationship. Again, it might make sense to look at setting up an individual policy in trust designed to pay out to your children from that previous relationship. A joint policy with your new partner or spouse likely isn't going to make sense in that scenario. Another example, if you are looking at taking out cover to cover your life for your working years, let's say that you want to cover yourself up until retirement age, but let's say that you're in a relationship where one of the two of you is younger than the other person. Again, a joint policy is only going to allow you to have one end date on it, whereas if you have it on an individual basis, then you can cover yourself individually, tailored to your specific retirement ages. Now, another common scenario where individual policies might make sense, even if you're looking at getting insurance as a couple, is where you have significantly different salaries. So again, if one of you earns a lot more than your partner or spouse, having equal amounts of cover may not be the best option, because usually the higher your salary is, the higher the financial impact is going to be if you are not around. So again, an individual policy in that scenario, tailored to each person's individual earnings and salary, might make sense, because if you were to do a joint policy in that scenario, then again, the cover amount has to be equal. Now let's look at some common scenarios as to when a joint policy might make sense. So if you're looking at taking out cover life insurance with another person, or do you know what, actually this video also, if you're looking at taking out critical illness cover, the same rules actually apply. But let's say that you're looking at taking out joint cover. If you are taking out cover to repay a joint mortgage, then in that scenario, you would likely only need one lump sum of money because you only have one mortgage debt. So again, having that on a joint life first death basis, joint life first death, meaning you're both insured, whoever is the first to pass away within the term of the policy pays out to the survivor, cover stops. Then again, it might make sense to do it jointly if it's to cover a mortgage. And the same goes for any other joint commitments or expenses, so joint debts, credit commitments, same principle applies. Here at Dunham McCarthy, we are a team of mortgage and insurance specialists. Now, we deal with lots of insurers, from high street names to specialist insurers, to compare lots of options and find the best deal for you. Now, we give advice on life insurance, critical illness cover, and income protection. So if you are considering taking out insurance, or you have existing insurance in place, then get in touch and we can help to make sure that the cover that you have is the best policy for your circumstances. We provide detailed and expert knowledge and guidance on your options and guide you through the application process completely free of charge. We also provide a free will writing service via mylastwill.co.uk for every client that we arrange an insurance policy for. So head over to our website, dm.mortgage, and book in today for a free of charge appointment. And of course, if you're finding this video useful, make sure that you subscribe to the channel and hit the notification bell so that you never miss a future upload. Now, another scenario where again a joint policy might make sense. If you're taking out cover, you're both legally responsible for a child or children, and let's say that you're taking the cover out to cover things like education costs or to provide a house deposit for the child or children, then again taking out a joint policy might make sense because the amount that you're going to look at covering is probably going to be the same if you're looking at providing cover for children that you're both legally responsible for. So again, this all comes down to the reason you're taking the policy out. Now, another good idea to consider a joint life insurance policy is going back to the earlier example where I said that if one person has a higher salary than their significant other, then having different levels of cover might make sense. But I just want to make a point here. Let's say that you're in a couple, in a relationship, one of you earns income, the other person is perhaps a stay-at-home parent, doesn't earn any financial contribution to the household. In that scenario, again, a joint policy still might make sense because the impact of the person that's not working financially on the household could still mean that the person that's in employment has unforeseen costs that needs replacing if that person isn't around. So for example, a stay-at-home parent is likely going to be responsible for childcare, perhaps other duties around the house that again are going to have a financial impact replacing if that person is no longer around. So I suppose the point I'm trying to make is that because somebody may not financially earn an income physically that contributes to the household, that person still likely has a financial worth if they were not here, in terms of still having an impact on that survivor. So again, a joint policy might still make sense in that situation. Now, here are some other points to consider when you are trying to weigh up whether it's best to do separate policies or individual policies versus a joint. The first key point that I want to make is that it's usually always worth comparing the cost difference between separate policies and joint policies, because sometimes the cost difference can be minimal, literally pence, between insuring yourselves individually versus insuring yourselves jointly. In that scenario, the benefits of having individual policies means that in a really horrible scenario, let's say that you both passed away as a couple in a car accident. If you have a joint policy, let's say you're insured for £200,000, that policy is only going to pay out once. There'll be one amount of £200,000 paying out to your beneficiaries. Let's say separate policies, the cost difference was only a few pence. Again, same example, you both passed away in a car accident. Both policies would pay out individually. So using that example, there would be two lots of £200,000 pay out, a total of £400,000 versus £200,000. And again, if you have young children, for example, financial dependents, then that money could be useful because the first £200,000 could perhaps go towards paying debts and other outgoings and expenses. And then the other person's £200,000 could go towards upbringing costs to the guardians of your children. So the point I'm making here is that even if, based on the common scenarios I've already gone over, you think that joint policies might make sense, it's usually a good idea to compare the cost difference between the two. Now, as I said, if the cost difference is more than a few pence or a few pounds and you're getting into, a £10 a month difference, a £15 a month difference, then you have to start thinking about what else could you have done with that extra £10 or £15 a month. Perhaps you could have got yourself some critical illness cover instead, or some income protection cover instead, or added on an enhancement to your policy, as opposed to insuring yourself for something that's possible. It's possible two people could die in a car accident, but ultimately it is unlikely or less likely than if one of the two of you were to pass away. Now, another point to bear in mind when you're considering the difference between individual and joint policies is if your relationship doesn't work out. Now, separation when it comes to life insurance policies or critical illness policies can be tricky. Now, some insurers do build in flexibility options where they allow you to separate the policies without further medical underwriting, and they make the process quite seamless. That's not the case for most joint policies with most insurers. You would usually have to cancel the current policy and take out new cover in a situation where you separate from your partner and you do not want them to receive the proceeds under that policy in the event that you are no longer around. Now, in that scenario, if you took that policy out 10 years ago, then likely, well, you are going to be 10 years older. So the cover naturally is likely going to cost you more per month. Let's not to mention, if you're now in poorer health, it might be that the cover is going to cost you more, or it may be that you may not even be able to get cover at that late stage, depending on what your health looks like at the stage that you're trying to take the new policy out. Whereas if you'd have insured yourselves individually in the first place, and if you were to separate, then that could make that separation as far as your life insurance policy goes much easier, and it's likely that you can just continue on with the policy that you had in the first place. Now, another key point to bear in mind when you're considering or thinking about whether or not you should do a joint policy or an individual policy is in respect of the application process. So when you apply for a joint policy, if one of you is in a situation where you've disclosed something medically on the application form and the insurer decides that they want to say write to your doctor or find out more about that situation before offering you cover, that's going to potentially hold up the application for the other joint party that you're insured with. A life insurer is not going to start a joint policy even if one person is in a situation where they're in good health and there's no need for further medical evidence. That person still has to wait for the application process to be concluded for the other party. So if you want insurance quickly, then it might make sense in that scenario to insure yourself individually, because it means that you can start your cover independently of the other person. Now, if you do decide to go down the separate individual policy route as opposed to a joint policy, again, I have to make that clear that that is not suitable for everybody. There are situations where that may not be in your best interest to do that. So another point to consider, let's say that you have decided to insure yourselves individually, but you are unmarried. Let's say that you have not put the policy in trust. So a trust basically ring fences the benefit and allows you to choose who the benefit gets paid to. Let's say that it's not in trust and you don't have a will either. Then that could be a very risky option, because depending on your situation, if you're individually insured and you're unmarried and you have, like I say, no will, no other provisions, then in the event of a payout, it could be that that policy gets paid according to what's called the laws of intestacy. The laws of intestacy means that your unmarried partner does not automatically inherit the proceeds under your life insurance. It could be, if you have no children, that that policy gets paid to your parents if they're alive, and then basically goes down the family tree. So my point is that individual policies is not necessarily going to suit every single scenario, even if on the face of it, it is providing good value for money in that the cost difference between joint and separate isn't that great. You need to make sure that you are getting specialist advice, guys. So head over to our website, dm.mortgage, book in today for a free of charge appointment so that we can guide you through your options and help you to arrange cover. And our service is completely free of charge. We compare lots of different insurers, from high street insurers to specialist insurers, to find the best policy for your circumstances. And for every client that we arrange a policy for, we also provide a free will writing service over at mylastwill.co.uk. If that video has been useful, make sure that you hit the subscribe button and the notification bell so that you don't miss any future videos from me, and make sure that you check out the other videos in the life insurance series as well. And I'll see you next time.